Form 8582-CR, Passive Activity Credit Limitations. So non-corporate taxpayers will use this tax form to either compute the amount of passive activity tax credit for the current tax year, which also includes prior year unallowed credits carried forward, and then the amount of credit allowed for the current year. And then also, taxpayers can make the election to increase the basis of certain credit property when they dispose of their interest in an activity. So there are 6 parts to this tax form. In part 1, we'll cover passive activity credits. So before we go too far into depth, there are 9 worksheets that accompany this tax form. They're all located in the form instructions. However, we've also taken the opportunity to post screenshots of each of those worksheets in our article so that you can walk through them as you complete this tax form. You might need all 9 of them. Most likely, most taxpayers will only need several of them. However, when I refer to a tax to one of the worksheets in either part 1 or as we go further down in part 5, then you'll know that in the article we go into a little bit more depth. So just understand that there is a lot of off-screen work that you will need to do. You will be pulling some information from other tax forms, and we'll talk about that momentarily. So in part 1, we're going to calculate passive activity credits. In part 2, we're going to calculate the special allowance for rental real estate activities with active participation. So there's an IRS definition of active participation, not to be confused with material participation. And we go through all of those a little bit more detail in the article, and we'll cover that in the form. In part 3, we'll calculate the special allowance for either rehabilitation credits from rental real estate activities and low-income housing credits for property that was placed into service before 1990. Or if you held a interest in a pass-through entity that you acquired before 1990, then that would be a part of this special allowance. In part 4, we'll talk about the special allowance for low-income housing units for property placed into service after 1989. In part 5, we'll total all of these up and calculate the passive activity credit allowed. We'll also talk about some additional worksheets that may be required depending on how you calculated your credits. And then in part 6, we'll briefly discuss the election to use your election to increase the basis of credit property if you disposed of your entire interest in a passive activity in a completely taxable transaction. So let's go to the top of the form. Before you start with part 1, you'll want to make sure that your taxpayer information is clearly at the top of the form. Your tax preparation software should cover that for you. So in part 1, if you have any credits from a publicly traded partnership, there is a part of the form instructions that specifically discusses publicly traded partnerships. However, that might be a little out of depth for the scope of this video, so we're going to focus on simply what we see in the form ahead of us. In line 1, we're going to enter credits from rental real estate activities with active participation. And in order to do that, you'll have to complete worksheet 1 in the form instructions. And worksheet 1 basically prompts you as the taxpayer to enter the credits from the current year from various tax forms, specifically IRS Form 3800, IRS Form 8834, and IRS Form 8586. And those are general business credits, the low-income housing credit, and the qualified electric vehicle credit, respectively. So you'll be able to input any of those credits that might be applicable to your passive activity. So really quickly, passive activity credits are subject to, or in the same category as passive activity rules that apply to passive activity losses. So if you are familiar with IRS Form 8582, you'll know that certain credits and certain losses can primarily be applied to other passive activity gains. Under certain limited exceptions can you apply either a loss or a credit to ordinary income, but primarily you're mostly able to offset passive activity income, and then you have to carry much of the rest forward. So there are special allowances, and we're going to talk about that. But in line 1, you'll enter the credits from worksheet 1, column A, and then in line 1A or 1B, you'll enter any prior year unallowed credits that were carried forward, and then you'll combine them. So let's just imagine that our hero, and we're going to use the same number throughout just to make things simpler. We're going to say that he had $1,000 of credit in from worksheet 1, column 1, and then he had $1,000 of credit that was a prior year unallowed credit. So that totals $2,000. We're going to do the same thing for lines 2A or 2 and 3. 2A specifically is for rehabilitation credits from rental real estate activities and low-income housing credits for property that was placed in service prior to 1990. And so there are different rules that apply to low-income housing credits for property placed in service in 1990 and beyond. But for the interest of this, if you own, say, low-income house, or if you own a pass-through entity like an S corporation or a partnership, and that has low-income housing credits, if you acquired that interest prior to 1990, it does not matter when the interest acquired the low-income housing or qualified for the credit. The fact of the matter is your interest in the pass-through meets that prior to 1990 timeline. So again, line 2 applies to rental real estate activities, but also low-income housing credits for either property placed in the service 1990 or property that's owned through a pass-through entity that you acquired before 1990. And then in line 3, basically this is for low-income housing credits for property that you placed into service after 1989, and this would include through a pass-through entity that you acquired after 1989. So again, $1,000 of current year credit, $1,000 of carry forward, and we've got $2,000 for each of these credits. Now in line 4, we're going to discuss all of the other tax credits that might apply. And again, there's a worksheet 4 that helps you calculate that. But again, these are pretty much other passive activity credits that don't meet one of these criteria in either line 1, line 2, or line 3. Okay. In line 5, we're going to tabulate all of these C lines, so 1C, 2C, 3C, 4C, and we get $8,000 of credit. There is a table in the form instructions. We've also included it as a screenshot in our article so you can walk through this tax form in accordance with this. And so basically, we're going to need to use the tax tables from the IRS form 1040 or other computation worksheets. I'm not going to do that for this. I'm just going to pull a random number. And again, this is not a computation issue, so forgive the inaccuracy. I guarantee you this will not be the actual tax. This is simply a demonstration so that you can see how this form flows. So I'm going to put in $2,000. We'll just pretend that that is the tax that is attributable. However, you would actually have to calculate that tax according to the instructions that you can either find in the article or on the website. So in line 7, we subtract line 6 from line 5. If line 6 is greater than or equal to line 5, then you would enter 0, and in this case, all of your credits from passive activities are allowed. So you can enter the amount from line 5 directly onto line 37, and you don't have to worry about any of these special allowances. That's what that specific line item means. So if you're trying to claim $6,000 of credit, but you had ended up paying like $10,000 of income, then you would just be able to carry the line 5 number all the way down to line 37, enter that as the passive activity credit, and that would be it. But that is not the case, so we need to complete parts through 2, 3, and 4 simply to account for all of these special allowances. Now, if you are a married taxpayer filing a separate return from your spouse, if you lived apart from your spouse at all times during the tax year, you can go ahead and proceed through part 2, 3, and 4 as applicable. However, married persons that are filing a separate return who live with their spouses at any time during the tax year are not eligible to complete part 2, part 3, or part 4. So in that situation, you are not going to be able to, you will just go to line 37 instead. So you would go to line 37, you would simply add line 6. You would not have any other items for line 16 or line 30 or line 36. You would simply carry the line 6 number down to line 37, and that's pretty much the allowed activity credit. So in part 2, we're going to calculate the special allowance for rental real estate activities with active participation. So there is a specific difference between active participation and material participation. And so if you actively participated in your activity, then you are able to use part 2 to calculate your credit from the rental real estate activity. Material participation is a higher, I guess, threshold, specifically for people who are in the real estate business. So if you actively participated, you can qualify for a special allowance. That's what we're going to do here, of up to $25,000, unless you're married filing separately, in which case that's $12,500. So that's going to be what we calculate in part 2. So active participation simply means that you were able to make management decisions with respect to your rental activity. So if you were part of approving new tenants, deciding rental terms, approving repairs or capital expenditures, And similar decisions like that, even if you had a property manager, you could still qualify as an active participant. The threshold for material participation is much higher. We go into a little bit more detail in our article. So in line 8, we're going to simply enter the smaller of either line 1C or line 7, in which case this is $2,000. We'll enter $150,000 here because John Doe is our hero and he is married. Now, modified adjusted gross income. So you're going to enter that in line 10. It is a standard term that is used throughout the IRS. However, it does have different meanings based on the tax situation. For example, the modified adjusted gross income as it pertains to Form 8582 is going to be different from the modified adjusted gross income that you would use for Roth IRA contributions, which would be different from the modified adjusted gross income that the Social Security Administration uses to make IRMA determinations, which is basically a surcharge on Medicare premiums. So be careful when you hear the term modified adjusted gross income, and if you think you know what that definition is, unless you've actually read the instructions, you probably do not. So there is a long list of, basically you're going to take your adjusted gross income and then you're going to modify quite a few of the line items. So basically this is the limitation that you'll need to calculate in order to be able to take the special allowance. So that I'm going to list out the items that you either withhold or do not take into account in your adjusted gross income. So any passive activity loss that's defined in Internal Revenue Code section 469D, rental real estate losses that were allowed to real estate professionals, any overall loss from a publicly traded partnership, the taxable amount of Social Security and Tier 1 railroad retirement benefits, deductible contributions to IRAs and Section 501C18 pension plans, the deduction that you're allowed for self-employment taxes, the exclusion of income of interest for EE and inflation savings bonds used to pay higher education expenses, any income amounts that were excluded under an employer adoption program, student loan interest deduction, tuition and fees deduction, and foreign derived income deduction. So once you enter all of those, let's just say we did that, and for our intents and purposes, we come up with $90,000 for John Doe. We're going to subtract this amount from the line 9 item. If for some reason this was bigger, then you really wouldn't have a whole lot. You would be multiplying 0 by a bunch of different numbers. So in this case, we have $60,000 left. We're going to multiply this amount by 50%, but we're not going to enter more than $25,000. So in this case, it's $30,000. That would be the 50% mark. So we're going to enter $25,000 here. If we had items from IRS Form 8582, either on line 10 or line 14, we would enter them here. For the sake of this discussion, because you can't see this form, we're going to enter zeros here. And then we're going to combine those zeros, and we're going to just subtract that entire amount from the $25,000. Now the tax that's attributable to the amount on line 14, again, you're going to use certain tables, which you can find in the article, you can find in the form instructions. I'm simply going to plug in a number here. So let's just say that this number is $10,000. We're going to enter the smaller of either line 8 or line 15, and that gives us a $2,000. That's the special allowance for the rental real estate activities with active participation. So in part 3, we're going to go through the special allowance for the rehab credits for rental real estate and for property placed into service prior to 1990. So in line 7, and then we need to enter the line 16 amount, which I can see on this screen right here. Let's go back to line 7, and it says $6,000. So we'll enter $6,000 here on line 17, and then we're going to subtract the difference. If this were zeroed out, you would enter 0 here. You would go down to line 30 and 36 and enter 0, and then we would go directly to part 5. Since this is not 0, we're going to enter the smaller of either line 19 or line 2C. And if you remember, line 2C was $2,000. We're going to enter that here. So in line 21, we're going to enter $250,000. If you were married filing separately and you were eligible to complete part 3, then you would enter $125,000. In line 22, you're going to enter the same modified adjusted gross income that we calculated in line 10. We're going to put that here in line 22, and then we're going to subtract that, and we'll get $160,000 in line 23. We're going to multiply this amount by 50%. And that gives us $80,000, but we're going to not enter a number that's larger than $25,000. So again, we're going to enter zeros just like we did here. If there were numbers in line 10 and line 14, we would have entered them. You'll enter the tax that's attributable to the line 16 amount. And again, I'm pulling a number. You would have to actually go through the separate tax calculation that's embedded in the article. In this case, we'll just enter $10,000. And then we're going to enter the line 18 amount in line 28. We're going to subtract line 28 from line 27. That gives us $8,000. And then we're going to take the smaller of either line 29 or line 20, which happens to be $2,000. Now in part 4, we're calculating the special allowance for low-income housing for property placed into service after 1989. So if you don't have an amount on line 3, you can skip this. If you do have an amount on line 3, then you'll go ahead and complete this. So since we completed part 3, we're going to enter the line 19 amount, which is $4,000. Otherwise, you would subtract line 16 from the line 7 amount, which in this case is $4,000, so it is the same. We're going to enter the line 30 amount here, and then we're going to subtract the difference. So if this were 0, we would enter 0 here, and then on line 36, we'd go to part 5. In this case, we're going to enter the smaller of line 3C or line 33, which these numbers are the same. We would calculate the tax that's attributable to the special remaining allowance. Let's just say that tax is $1,000. It's not, but I'm using this as a placeholder. We would then enter the smaller of either line 34 or 35, in which case this is $1,000. And now we can go to part 5. So there are five different worksheets that might be applicable to part 5. Generally speaking, you'll complete one or more of those worksheets if you had an amount on either line 1C, 2C, 3C, or 4C, and you had tax credits from multiple activities. So you would use those worksheets to combine those credits, and then that would help inform you how, how to calculate the credits to apply here. We don't have credits for multiple activities, so we're simply going to add lines 6, 16, 30, and 36. Also, there's additional instruction for publicly traded partnerships. We're not going to cover that in this video. However, the form instructions contain probably another 1,000 words on what to do if you're in a publicly traded partnership. So for this example, we're simply going to add the requisite lines. We have 1,000 plus 2,000 plus another 2,000 plus 6,000. So, sorry, 2,000, the line 6. So 2,000 plus 2,000 plus 2,000. So this is $7,000. This would be the allowed passive activity credit for the tax year. Now, if you disposed of your entire interest in a passive activity or a former passive activity, and the transaction was fully taxable, you can elect to increase your basis in credit property that was used in that activity by any unallowed credits. So if your basis was lower because you had a credit that you weren't able to apply, you can carry that credit over to a passive activity that you currently own. So you can check this, and then you would say what the name of the passive activity was that you disposed of, and you would say what the description of the property was, real estate rental properties, multiple, for example. And then you would say this is the amount of unallowed credit that reduced my basis in the property, whatever, $50,000 in this case. So that's how you would elect to increase the basis of credit property that you still own. So this is a much more complicated form than I made out in the video. Hopefully you were able to derive some benefit just from walking through the form. You can learn a lot more about this form by reading our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8582-CR. You should see our article. I'll also put a link in our show notes for you. There will also be links to other articles we've written on some of the tax forms that we've mentioned in this video. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And if you have any questions or comments, as always, please post them in the comments section and I'll get back to you as soon as possible. Thank you very much and have a great day.